Hi everyone, I'm Yosha. I'm moderating this session today for how FinTechs catering to the underserved and ensuring diversity in their offerings. Very excited to be here. And Rapid are the sponsors, session sponsors for this session. So we'll start with a quick introduction by Rapid, and then we'll jump into the rest of the discussion and the introduction by the other panelists. Over to you, Joel. Joel is the Vice President for Asia Pacific for Rapid.
Thanks very much. And let me just say I'm thrilled to be here today. I think the topic is one that's near and dear to a lot of our hearts. And it's great to be with this illustrious panel. Despite being a virtual FinTech fair, it's amazing to be able to bring people together and start to address some of these issues that are so important for all of us. When we look at payment ecosystems around the world, or ecosystems in general, we fundamentally believe that payments is a critical component to expanding job growth and job opportunities, which is ultimately a critical, decisive factor in improving the lives of the underserved across the world in all scenarios. How did we get here? Connectivity over the last 20 years has been on an amazing journey across the world. It's really created new types of opportunities for people. When we say connectivity, we look at data, access to the internet, access to mobile broadband, the ability to connect to the world. We look at smartphones, migration from either no phone at all, landline, the generation around the world that skipped landline and went to mobile phones, and mobile phones that went to smartphones, where we now have over 3.5 billion smartphone users around the world. One thing we usually don't talk about in conferences like this is access to an identity card, whether it's a physical ID at all, which many people around the world to this day still don't have, or something exciting and sexy that we often do talk about, an electronic ID or a national eKYC scheme, et cetera, where we now have over 100 countries around the world that actually have durable physical IDs that can be leveraged in an online KYC process, whether we're talking about scanning an ID with a camera or scanning a fingerprint on a phone to unlock identity. There's a vast range, but it's a fundamental component to how you provide strong identity in an online scenario. And then last, and the thing that we often talk about, is real-time payments, where we now have access to over 50 different real-time payment systems around the world. 2.5 billion customers that are accessing the world through mobile wallets at this point. And in our case, I live in Singapore, 1.5 billion of those users are in Asia Pacific. And we expect that number to go dramatically upwards as we look at the overall commerce opportunity of the world. Shopify predicted that 80% of it's going to be happening online in Asia by the end of 2023, and that's pre-virus. When you look at another aspect of the story, we look at large platforms, right? Whether it was marketplaces like eBay or Taobao that really brought sellers online for the first time and gave them an opportunity to find buyers, express their services, and unlock new markets, or now increasingly the chat world, right? WeChat, WhatsApp payments, Instagram, et cetera, where people are able to reach out from their home, who may not be able to travel even from tier 3 and tier 4 cities, and actually sell to the world for the first time. They can reach clients, they can sell goods and services, and they can actually also critically buy supplies and buy services at a more affordable price than they might be able to have previously gotten for themselves. Where we still have a lot more work to do is on the lending side. Right? Access to capital expands the buying power of your customer, but more importantly, it expands the buying power of a micro SME or an SMB that's actually trying to build a business. In any country around the world, it's virtually impossible to build a business of scale and to create jobs without access to credit. We believe that's a critical frontier where our industry, the FinTech industry, still has a lot farther to go, whether it's bringing new data to the market, offering new models, bringing it to new ecosystems entirely, and introducing it in new ways. It's really a frontier that we have not quite solved yet, and it's really the biggest opportunity that we see going forward. Rapid is probably not a familiar name to many of the folks in the conference. What we do, just very briefly, is our goal is to reduce the barriers to pay or be paid everywhere around the world, where there's payment innovation happening, there's locally preferred payment methods, there's local payment culture. We unlock those payment methods, we make them available globally, and let people actually innovate in their local market, innovate globally, and sell globally, and actually build a new ecosystem that we consider a payment network so that everyone can grow faster together. So as I said, very thrilled to be a co-sponsor of this panel. Happy to be here and participate. And we look forward to helping solve some of these challenges with everybody going forward. So thanks very much.
Thank you, Joel. So yeah, I mean, like Joel said, a lot of us here are very passionate about financial inclusion as a topic, including me. And we have a fabulous panel here today. We have two leading fintechs, one from India, one global, which is Rapid and Nearby. We have a development bank, Asia Development Bank, and we have the Financial Alliance for Women, who are doing fabulous work in actually championing the cause of women in financial services. So we'll go with a quick introduction about everyone and very quickly about me. I've spent 15 years in fintech, been doing a lot of financial inclusion consulting with the World Bank Group and with other organizations. And I run my own startup as well, which actually is very focused on creating sustainable livelihoods for artisans in India. So this topic is very close to my heart for sure. Anand, we'd love to start with you. If you can tell people more about yourself and about Nearby. Can you unmute yourself as well, all of you, before you speak?
Yes.
Yeah.
Sorry, I was saying that I'm a chartered accountant with no interest in past history and accounting, and we are here to create the future of money. We believe India massively is unbanked, underbanked, or misbanked, and we are here to help India rebank. We are across the expanse of the nation, 17,000 postal codes of the 25,000 relevant postal codes, with 5 lakh retail mom and pop stores, 500,000 mom and pop stores. We serve about $700 million of throughput each month. That makes us one of the largest and the responsible most financial service provider in the country. And we believe that we, like Joel said that about the togetherness and building a platform. So we say bigger together. And from what we have built, we only see that with the platform approach and the network that we have formed on the ground, we can reach services to every common man in the country. And we are at it.
Okay, thank you so much. Lotte is the Regional Director and Pacific Liaison and Coordination Office Head for ADB. Lotte, we'd like to hear from you as well.
Hi, thank you for inviting me to participate today. It's really great to be here, although we're all quite virtual and in different parts of the world. It's great to be here though. So as mentioned, I'm Lotte Skasebel. I'm Regional Director for ADB Development Bank's Pacific Office. So I'm based in Sydney, currently in Stockholm, which is my home country. So as you know, ADB is a multilateral development bank, and we focus on creating economic development impact, which is really about reducing poverty and promoting social and economic development. And I think COVID has really exposed a lot of vulnerabilities in social, economic, and financial systems. And during these past few months, we've been working quite extensively with governments across our developed member countries establish fiscal response and emergency programs. And many of these include cash transfer programs for displaced workers, credit support for small, liquidity-strapped enterprises. But these cash transfers can sometimes be difficult to implement because the infrastructure is simply not in place. So it may be difficult to identify beneficiaries, set up effective payment mechanisms, and also to disperse the money. So I think today's discussion on how fintechs are catering to the underserved and ensuring diversity in offering is a very timely and also very important discussion. So I look forward to our discussion later on. Thanks.
Thank you, Lotte. Inez, she's CEO for the Financial Alliance for Women. Inez, if you could tell
Thanks,
us.
Yeah, I run the Financial Alliance for Women, which was set up by financial services providers to act as a peer learning organization to support one another to grow the women's market. And so mainly what we do is create learning opportunities where we can cross fertilize know-how from different countries across different institutions. And our membership, you can look at us up online, but our membership has some of the largest banks in the world. And many of them are working with fintechs. Very few of them are working with fintechs on women's markets. So we'd like to change that. Thank you.
Thank you so much. Joel, anything else you'd like to add about you and your experience?
Sure. So I've been in payments for a terribly long time. Doing it at Rapid for 2 years, Grab for 3, PayPal before that, and before that, JP Morgan and a bunch of other stuff. But effectively been doing online payments since 2009. But one of the through lines to all of that is really being in a mission-driven space, right? How do we create opportunities for people and what are the tools that we need to provide them so they can help provide for themselves? I think it's the most powerful way to think about how we grow the world.
Yeah, that's a great way to look at it, actually, how to create opportunities for people, because that's quite inextricably bound with financial inclusion, right? So thank you so much. Yeah, so we'll jump into the discussion. For the attendees, if you have any questions, do feel free to put it in the open questions, and we'll either get to it towards the end or during the panel discussion. So I think to start with, it will be great to frame the scope that, you know, when we look at the underserved and the unbanked, there's, I mean, if you look at the FinTechs database, it says there's 1.7 million unbanked adults across the world. But it'd be good to understand, like, who are they? What are their requirements? Where are they? And, you know, just so it gives everyone some context around where is the major underbanked population of the world. So Lotte, it would be great if you could help shed some light on that.
Thank you. So I think one first thing is to understand the needs of the underserved market. And it's really pretty straightforward. It's really having control over your day-to-day financing, yeah, or day-to-day finances, and just being able to absorb a financial shock and not having to worry about your finances. And just to give an example, I work now quite a bit in the Pacific, and I was talking to one of my team members who's based in Honiara, and she was telling me a story about a teacher in Vela La Vela Island in the Solomon Islands. And where she needs to access her wage or remittances that she may receive, every 2 weeks, she has to take a day off work, travel to the neighboring island, Gizo Island, and let's take a boat. And the waters can be quite treacherous. They have lots of disastrous areas, cyclones and what have you. And she'll get to this Gizo Island, and hopefully there's connectivity so that she can then access her money and go buy her food and then bring it back to Vela La Vela Island. And this is not uncommon in many Pacific islands and many remote places around the world. So, and then since it's the beginning of COVID-19, it has really also accentuated the transition from cash to non-cash payments. So this makes it even more challenging for places like this. So actually, even in Solomon Islands, there has just recently been an effort with Easy Pay to develop a digital payment scheme. So things are moving along, but then looking at who then are the underserved. And I think you have those that are already banking. There may be those that are a little bit older than us. I'm not that young, but even older, and who may just be resistant to using digital payments. And I see even here in Stockholm, where I am right now, you have older people that come and pay cash. So those are those who are banked, but they're resistant to change. And then you have the digital natives and millennials. They're the Generation Z, like my kids, who are basically brought up with a phone in their hand, and they are completely online. And they may also not use the traditional banking system. They might go to digital-only banks, the completely online, and finding other ways of accessing funds. And then you have those who are financially excluded, who don't have an ID, who don't have a phone, they may not have electricity, they may not even have network coverage. We work in Papua New Guinea, for example, with 5% of the population have a birth certificate. So they're both socially and financially excluded. And then of course there's lots of ways to help these people. And, you know, I think Joel mentioned this before, you have to make sure that they have an ID, they have to have electricity, network coverage. You need to have the infrastructure in place, interoperable payment systems, and you have to ensure trust. Trust is, if you can gain it, but you can lose it very quickly. And once you lose it, it's difficult to gain that trust back. So you have to make sure that consumer protection, you need to look at cybersecurity, which is a critical issue now when we're moving more in the online environment. And I think one of the most critical issues is to be customer-centric. Understand the needs of the client and make sure that the services and solutions you're providing really meet the needs of the client. So you need to understand them. You need to understand their behaviors. There comes in a lot of behavioral change in this. So I think those are some of the key issues. And of course, empower women. Women are known to be better savers. They're better at managing their money. So you need to empower women. But I think we'll get to that discussion later as well. Thanks. I think you're on
Thank
mute.
you. Yeah, sorry. Thank you for that, Lotte. I mean, that very true. When we look at, I mean, these groups, some of the groups that you mentioned already, and at the end when you talked about women, I mean, if we look at global statistics, again, it's 56% of all the unbanked are actually women, right? So I mean, Inez, you've done a lot of work with this, with banks and financial institutions, and now with fintechs as well, as you said. So would be good to understand that why is this the case, right? Like, why is it that women have traditionally been the biggest percentage of the underbanked and the unbanked? And what is it that you think could be done to bring financial inclusion for women through fintechs and through financial institutions?
Yeah, sure. And of course, you know, the root causes of these things are run deep and are structural. However, there are many ways to unpack this issue, I think. And first of all, I think we should reframe, you know, women. They're 51% of the population, so they're not really a segment, right? They are the chief purchasing officers of their households. So once you get a woman into your fintech or into the system, you can sell on a lot of additional products. And so when you're looking at the business case there, it's very compelling. So in our membership, we do see women products per customer going up significantly once you have actually offered them what they need to succeed, essentially, which, as Lottie mentioned, trust is huge, understanding behavior, roles inside the households, and so on. So getting deep inside those households and understanding roles and responsibilities and behaviors. I would say also it's very important always to combine not just financial services but non-financial, and so you're talking about financial and business education, more information that's relevant, given in a timely manner, also access to networks and community. So to establish, not only will you get more people through word of mouth, etc., but also you'll establish that kind of trust, and you'll get networking effects out of that. If you look at the on-bank segment in particular, as Joel mentioned, you know, there is a gender gap in access, and that's persistent, as FinTechs data has reported over the last, 3 big surveys. A big win would be to digitize payments, as Joel has mentioned. So whether that's a big win for women, that is, whether that's government to person transfers, the majority of which go to women, whether it's wages or agricultural payments. So that kind of digitization is extremely important. We're also seeing, as Joel mentioned, access to credit being a really huge problem. And so this is not just an emerging market phenomenon. This is global. So for instance, in Mexico, 29% of women have access to a formal loan. It's 89% in Canada. But in many, many countries, and I should say, that really does vary. And so it's not just consumer lending or business finance, it's housing, it's across the board. Women are basically under leveraged. We're also seeing huge opportunity in looking at women's life moments. And so getting to what they need in the moment that they need it, and being relevant and making yourself useful in that point. And this would be true for unbanked as much as it is for any other segment. And I think what's extraordinary about the women's market is that the same kind of needs are the same across different segments, regardless of income. So that's access to finance, education, business education, as well as financial network and recognition. And I think the FinTech community has a massive opportunity here, because obviously you're ahead of the curve in terms of technologies. We've seen lower EKYC requirements, which has brought a lot of women on board and access to those basic accounts, savings, nano loans, etc. We've seen the use of different kinds of alternative data for underwriting, and Shiros in India, for instance, has 16 million women in their network, and they're using that data, that transaction data between buyers and sellers to make up that credit history and establish, if you like, patterns of behavior that can be used for the underwriting process. We've seen some fintechs take a look at their algorithms to uncover unconscious bias, which we know is quite, there's a lot of danger in that going forward, as AI really takes those algorithms to new levels. So really unpacking that unconscious bias that's in there. And we do have data that shows discrimination in terms of pricing to women, because they have less formalized collateral. We're seeing platforms such as Elvest. I know it's a different segment than what we're talking about, but it is relevant as a case. They've created, so that's a wealth platform, but they've really looked at the different life patterns of women, gender pay gap, for instance, so lower life earnings, longer life expectancy, career breaks, etc. And they've embedded that into their wealth algorithm to support women. Blockchain obviously has a huge potential in terms of codifying property title, etc. And I would then point perhaps most importantly to the gap in terms of the income generating potential of loans. And the segment, so I think microfinance did a good job at a certain segment, let's say, of the unbanked. There's that small but growing women's segment and men's segment that are in between microfinance and commercial banks. Nano loans aren't really any use to them except for building up credit history. And that's where the innovation needs to occur if we're going to actually put food on the table and help those kids go to school and all of those good things. So there's a lot of opportunity in the women's market, and we'll talk later about what we found recently in our research with FinTechs in terms of their attitudes to the women's markets and perhaps overall a lack of awareness that's still out there.
Yeah, perfect. Thank you so much. That was very insightful. I guess, I mean, just kind of going segment-wise in terms of the other underserved segments as well, would, you know, Joel, for example, would migrant workers and remittances is also a big, you know, big segment over there. And I mean, again, a lot of data shows that the cost of remittance still remains prohibitively high. It's quoted as like 7% on an average, and in some cases it can even go as high as 10%. And you know, the research actually shows that if this 7% could actually be reduced down by 2 percentage points, it could actually lead by 5 percentage points. Sorry, it could actually lead to savings of up to $16 billion for migrant workers. So any thoughts on, you know, why is remittance still such a expensive proposition, and what can fintechs be doing better? Because Rapid is obviously doing a lot of fabulous work in this space.
Yeah, I think there's actually Lotte, I think, mentioned a pretty good example, which is related to the Solomon Islands, right? So remittances is not only cross-border, right? The larger flow is actually domestic as well. The early success of things like M-Pesa was actually facilitating sort of up-country, down-country domestic remittance, where travel costs, et cetera, were prohibitive. There were safety issues, et cetera. So I think it's a profound both cross-border and domestic scenario, where access to real-time payment schemes or e-wallets that can actually cut out those legs are very, very important. What Pay Nearby is doing in terms of electronifying cash and then letting cash travel faster than the people themselves, I think is very, very important. So it's really about bringing this diverse network together with a common backbone in a way where people do have access to some type of an account that they can KYC to, money can be electronified, money can move, money can exit the other side. In the cross-border side of the equation, at the end of the day, right, that's a massively profitable business, right? So the incumbents have very little incentive to reduce the cost of foreign exchange, because at the end of the day, if there's no access from the sender or the receiver, they don't have to, right? And so the more entrants in the market, the more liquidity in the market, the more different rails made available, the faster prices will go down, because ultimately it's really just price taking by the folks in the middle. And so when you start to see the development both of the millennial, you know, so digital wallets, the Revoluts and the TransferWises of the world, that are doing a good job of cramming down pricing at the top end of the market, what we really need to see is that same thing happening in the middle market, in the commercial remittance market, where businesses are paying businesses, and then for the foreign domestic worker, the low end of the market as well, which actually does pay a lot of the highest prices, although ironically, they're very often incredibly canny shoppers. So in fact, it's the guys in the middle paying a bit more than the people at the bottom, right? Because they actually know where to go for prices and they actually do a good job of exchanging data and things like that. But ultimately, it's about price taking. And so part of our vision and what we see happening across the industry overall is bringing the networks together so that you can get a better price for any particular currency trade, and then make that available through a set of APIs and a software development kit so that people who do want to make cross-border money available can compete, right? I think we succeed in when there's 1,000 TransferWises competing in this space, not 15, right? So I think it's very, very important to open up the market and bring these networks together to create these opportunities for different segments in different ways.
And just to, I mean, question you further on that, like when you talk about networks coming together, who can best enable that? Is it fintechs working together in partnership with each other and with financial institutions? That's one part of it. But what else can be?
I think it's a part of it. You froze up. I think it's a part of it, but I think, and it's not often that people give credit where credit is due, I think. But I think one of the most profound changes we've seen in the last 10 years is regulators actually stepping up. And rather than trying to put the brakes on and slow things down, they're trying to push the gas in and accelerate things and look at what's working in other markets and create new opportunities. You know, if you're a fan of sandboxes, there's lots of sandboxes, but I think real-time payment schemes, real-time identity schemes, request to pay schemes, all of these do a great job of speeding up money. And the more regulators look at each other and say, how can we go faster? How can we create more opportunities? It actually brings people into the market and opens up more innovation. And then when you start to look at the cross-border side of things, clearly every one of these local schemes has its own ways to connect, et cetera. And that's where networks like Rapid actually start to bridge those barriers and reduce that barrier to entry, so that if you want to transact in Thailand or India or the US or Mexico, you can do it one way versus doing 4 or 14 integrations to get access. So we see ourselves as bridge builders and our competitors as bridge builders to innovation that's happening around the world.
Thank you. Yeah, and Lotte, anything to add? Yeah, I was going to ask you, Lotte, if you want to add something to that.
I'd love to add something. coming back to one of my comments earlier is about data security and cybersecurity, and I think this is really critical when you talk about remittances. You need to focus on the KYC. And one thing that we're seeing, for example, in the Pacific, which is also has one of the most expensive remittance corridors in the world, is that global banks that have been withdrawing correspondent banking relationships and closed accounts with money transfer operators in a number of Pacific islands due to weaknesses in AML/CP compliance. And sometimes this has unintentional and very costly consequences. And the people that really bear the brunt of this are really the poorest, the most vulnerable people. So addressing the KYC and compliance with AML/CP, I think is really critical. And it also brings us to what you were talking about before, and Joe mentioned the partnerships. I think it's critical to work across a number of partners. You have central banks, for example, they provide definitions, interfaces, and accounts. You have governments, they make regulatory changes. FinTechs, they deliver all the innovative solutions that regulators are not best placed to do. So they have that important role. And then you have the big tech coming in and have huge reach already and enormous amounts of data. So bringing these different partners together, I think, is a way forward as well. I just wanted to, highlight again the security issue and cybersecurity and protecting the consumers at the end of the day.
Absolutely. Thank you for that. I think, would be good to talk a bit about the SME segment also, Anand, coming over to you. Especially like Joel mentioned, creating opportunities becomes a very big part of this whole discussion about financial inclusion. And again, if we go back to the FinTech survey, when they questioned the unbanked segment about why are they not using, what is holding them back from using any financial product, one of the biggest reasons they cite is the lack of money. Like there is no money actually, so what do they do with the financial product, right? And the work that you're doing with retailers, hundreds and thousands of retailers across the world. So it'd be great to get some insights on what can be done for the SME segment and income generation opportunities.
Yeah, just about 1 million SME retailers is what we work with, and they're great partners with us. And you and Joel rightly said that credit will certainly speed in the commerce and the digital payment interfaces that India has evolved as a poster boy today with UPI as the grand success. Certainly takes the cake away. Now let's understand the perspective of the most of the SMEs in India have been out of the tax radar because of A, low income, and B, because of non-written records of many things. The way the commerce happens in tier 2 and 3 and beyond towns, it's a cash transaction, and hence they do not have a proven track record basis which banks or other financial institutions could have given them lending. And lending certainly helps them get more products. As a working capital is available, they can buy more. But there is a pseudo layer of credit available to the SMEs today, through the distributors. It's world over, not only India phenomena. The wholesalers and distributors who give them 30-day, 90-day credits, and the stock turnover based repayments are happening. So to some extent, the credit part is solved. But what is exciting is to help bring digitization culture into the ecosystem, and India as such, the government of India, the finance ministry, the Reserve Bank of India, powered by the National Payment Corporation of India's platforms, has done a great work, both on bringing people onto easy digital payment mode, where today 500 million India would be very easily able to make payments if they want to through the Android phones. And with the UPI QR proliferated everywhere by multiple of these partners today, it's a problem of plenty that one is thinking, how do you control the volumes that each of them can drive? And a little early, but yes, those are the thoughts for a much more stable economy, and lest you get concentration in risk in one partner at such a large national level. Now that said, MSMEs are to be looked at two ways. One, and this is my favorite, that while you go and buy goods from them, and I say that 2 kilo aloo, 1 kilo pyaj, 500 rupees ka mutual fund dena. For others to understand that the engagement between banking and financial services should be merged, and the grocery services should be merged. I should be able to go and say a kilo of apple, 2 packets of chips, and 500 bucks of fixed deposit, please, to the same retailer, to the grocer, to the mom and pop store around the corner. And inshallah, we have been able to accomplish a good first early success today, with 120 million citizens being served on this platform, with 700 million give or take throughput every month, the dollar fluctuating. Sometimes we say 650 million or 700 million. That quantum has helped demonstrate that every Indian who is unbanked, underbanked, or misbanked deserves a chance to be rebanked. And who better can serve the sachet of trust of a bank but for a corner shop, a mom and pop store whom I trust. So we have taken leverage advantage of their already existing trust. We have augmented their trust quotient by helping them disseminate the sachets of financial services to common man. Now, beyond credit, beyond trade, there is certainly insurance, which about 1% or 0.5% of the trade would be today insured. People don't believe in ill effects in India, not only out of lack of knowledge, but also because of optimism. The general sentiment in India is very optimistic that nothing will go wrong. God is there with us. We will do this. The goods will transit. The shop will remain intact. There is no fire that will happen, or the burglary will not happen. And people are, they avoid insurance, which is another large module waiting for deployment. And at PayNearby, we have last year hired VCare, which is a fantastic team of friends who have come together and consolidated into PayNearby larger team as an insurance broking setup. And now we are disseminating those small sachets of insurance at granular level, which no manufacturer can go so easily. Certainly, having said that, the 1 million odd touch points available across the country, length and breadth, with the verifications done, due diligence done for them with their lat long, with their digital KYCs as they are possible, account verification or tax identity verifications, they are available now to do multiple things on top of it without occupying shelf space. Yasha, the best part is that once we have acquired them, now it is about disseminating services after services on this platform to this network. So tomorrow, a cross-border remittance, this is the network available to you on the ground. Tomorrow, OTT players, the Hotstar and the Netflix wants to disseminate into India. And imagine 400 million WhatsApp users with smartphone. They can suddenly just go to the store and say 1 packet of chips and 1 month of Hotstar, please. Or don't forget my 500 rupees of FD. So that is what SMEs are evolving into. And I must compliment the ladies for having driven the work for the women empowerment, so to say, women-led empowerment, sorry, because they are already empowered, and my mom would beat the hell out of me if I tell her women empowerment. She says, I'm already empowered, go and ask your dad. No, that said, our belief is that India, the women are the GDP reserve of the nation. And we believe very closely with Niti Aayog and with many other well-wishing people, organizations, IFMR, for example. Last year, Nirbhik Hai Tu Nar Hai, theme was launched by us in partnership with Niti Aayog at world's largest university for women, Vanasthali Vidyapith, which is where my mom also graduated from. But important is that women are unfolding a lot of liberations in terms of joining hands on the financial services platform. And I think that's the start of a lot of things.
Thank you so much. I love that line about women are the GDP reserve of the nation. That was really great. Could I just quickly ask you to also just highlight for us, Anand, that of when you went to, I mean, in like, you know, getting access to these 1 million SMEs, what were the main challenges though, and what have been some of your key best practices in being able to, I mean, it's great that it shows that there's a clear business case out there, right? Which is what we ultimately hope to be able to show for these sectors. But what were your key learnings and what were the biggest challenges in getting access to these 1 million SMEs?
So I'm a great digital believer. The digital and physical mesh is what I believe in. And if the methods and formulas are right, if you have designed it for scale. So we follow two formulas within the organization. It's no trade secret. We talk about it. One is we say automate or eliminate. If you can't automate the thing, don't do it, eliminate it. Just move out of it because scale will not come. And second, we say that stability before scale. So everything that we do, because we serve the citizen who don't tweet. Yasha, that's most important part, that we have to be extra responsible. The citizen whom we serve don't tweet. They talk to God directly. The complaints goes there. You cannot fool around or take the liberty to let the transactions fail. Someone doing a digital payment will just tweet and get his money back in a second. But my customers, they have a little long haul, but a very, very impactful approach. So we believe that if we have designed things right for scale, the scale will happen. And I am quite an impatient guy. I believe that if the designs are right, why can't I get 5 million, 10 million tomorrow? And there is no difference between my target and my due dates. When the targets are done and the methods are refined, we should go after it. But having said that, what went right is that our reading of the regulation is very positive. The government has been very encouraging in India. The 29th February, it was a leap year in 2016, the Department of Financial Services brought out a cabinet committee note, para C3, which encouraged to do a lot of digital work around MSME field industry, are few of the drivers. And reading the regulation, the regulators writes a very interesting enablement programs in those 2 pages of circular. And we are largely aligned on the compliance side, and we see that how best we can reach out things to people. So the trust quotient that comes along the work shows. Important to mention, I own 5 patents in banking in India out of the 6. That brings the sincerity of clarity of thoughts and deep insights, because you will not be fooling around then. In 4 years of our work, if we have become one of the largest Asian banking platforms, we intend to go across the globe as well. So I think those few things, I don't know if that gives out.
Those were very helpful. Thank you so much. Yeah. I guess we have about 7-8 minutes remaining. So just coming back to women, and we discussed that a little bit with Inez, but Inez, if you could tell us a little bit more about, I know you've recently done a study around FinTechs and what they're doing for the women's segment, for the women's market rather, not segment. Could you share some learnings? You know, what have you seen over there? And a couple of them examples you've mentioned already, but if you could tell us a bit more, that what's been done, what do you think remains to be done, and how can FinTechs actually do better to serve the women's market?
Yeah, unfortunately, it kind of does go back to basics of really understanding that there is a women's market in the first place, understanding that needs and preferences are actually different to men, and doing the research and figuring it out, if you like. So it is back to basics. We do have a lot of research on our website. We gather it from different sources. And the main source, I would say, is our own members who conduct research on a regular basis. So, and we aggregate that up so that other people can take a look. In the current research that we did with FinTechs, which was a sample of 175 in quant and then over 40 in a qualitative, we found that 80% do know the gender disaggregation of their customers. but then most of them are completely gender blind when it comes to crafting their business plans, and much of the data that they capture on women users is kind of incidental to their operations. So what we found, for instance, is that just 11% of our B2C FinTechs had used gender as a criteria to segment the market. The most frequent segmentation is based on income and then geography. Only 8% have calculated, broke down, disaggregated by gender to calculate the TAM, or the total addressable market. And of course, that's a big problem because that's a big number they're using to raise funds. But then of those FinTechs that did have gender disaggregated data, the business case that's emerging is quite compelling. So we see user pattern rates similar or higher for women than for men. We also found that 95% of those that calculate this found that their CAC, or cost of customer acquisition, was lower or similar to men, and that 86% found that the lifetime value of women customers is similar or higher than that of men. And so what you're seeing really play out is patterns that we've seen in the incumbent sector, which is fundamentally that if women are served well, they will buy more and more products, that you have to combine that holistic value proposition that includes financial education and information with some kind of networking, preferable. And then you get that word of mouth and all sorts of kind of cumulative benefits in terms of reaching that scale through lower cost of marketing and so on. So the main thing I would say is that FinTechs kind of do have to wake up, understand the women's market, if you like, and become more gender intelligent. And in that way, they can unlock the value of the female economy, which, as I mentioned at the beginning, is enormous and growing.
Yeah, fabulous. Thank you so much. Great. So we have 5 minutes to go. I guess it would be great to kind of summarize and ask from each one of you, what's on your wish list? Like one thing that you think FinTechs should do better, or what would enable FinTechs to do better in, either of those. It'd be, we'd love to kind of go across the table and hear from each one of you that what's on your wish list. Joel, if we can start with you.
Sure. Going back to the few things I mentioned at the top, I think, strong ID. And what that I think is absolutely correct to mention that that's a fundamental component for AML and actually unlocking safe and compliant transactions. Accelerating and bringing to life more requests to pay and real-time payment infrastructure that we can then start to innovate on top of. To me, those two are the foundations that everything else, whether it's credit or new experiences or new marketplaces, spin off of. And the faster we get those two innovations across the globe, the faster the economy can move for everybody, women, the underserved, and small businesses.
Perfect. Thank you so much. Lottie, do you want to go next?
Well, I think, so we're talking about FinTechs, right? How they can support. So I think FinTechs, they should add value to the industry and to the people at large. And the customer should be at the center. And what this really means is that it's important to identify the problem you're trying to solve and have an understanding what the intended impact will be for the end user, so for the client or the woman. Financial services, they should also meet the needs of the individual user. So you need to really understand their needs. This comes back to what are the women's needs, what are their lifetime moments, as was mentioned before. Then you have to be equipped with financial literacy and financial capability. And there's an important distinction between literacy and capability. And I think that's important to keep in mind. And the consumer must be protected. They have to feel comfortable and secure about using and disclosing their information when they're going online. And partnerships. There should be partnerships between FinTechs, banks, and regulators, and this can provide a mixed ecosystem with financial market participants. And they must be well defined with clear roles and responsibilities. Thank you.
Okay. Thank you so much. Anand, over to you.
Since we work on bringing the high end of technology to the bottom of the pyramid, it is important that we accomplish Har Dukan Digital Pradhan. That is my wish list, that every shop should be able to be digitally enabled. And there are modules that we have built on helping retailers survive in their own business so that they can do our business. And these are connectors where customer can order to retailer, and then retailers can also purchase from distributors. And companies like Nielsen and etc., who are data driven platforms, they partner with us to do the insighting for the FMCG manufacturers and production planning. So it's end-to-end digital, and we will not leave any stones unturned. We already do 1% of what ATMs do in India, and we are looking at the missing 2 zeros, and we are at it. So we will bring them on our side.
Perfect, thank you. Ines, over to you.
Yeah, I mean, I think really start with disaggregating the data and calculating the LTV and the CAC and build that business case. And then you'll find the opportunity to differentiate yourself and really create that value.
Yeah, thank you so much. Great. So I hope we've left all of you, we don't really have any open questions, but I hope we've left all of you with, you know, an understanding of who the underserved are, what their needs are, and more importantly, that there's a clear business case out there for serving the underserved. And you've heard some great, you know, best practices and examples from each of the panelists. So yeah, we really hope that a lot of you, more of you will, you know, start FinTechs to help the underserved.